Hello, everybody. Welcome to our first audio and visual presentation for Market Truth. This is Wednesday, January 12th. This is our nightly recap. What we're going to do is just like we did on the first three blog posts. What I'm going to do is run through here, and we're just going to do we're going to do the same thing, but I'm going to show you some charts and explain things a little bit better for you. The last couple days, I talked about how strong this market is. Uh, it just continues to be strong. Everybody's waiting for a pullback. Um, the grind higher continues, and I mentioned that when I look at the components of these indices, um, the stocks that make up the indexes are breaking out. I mean, they're not simply overbought, but they're actually breaking out and breaking out of strong bases. You generally do not see indices pull back when stocks are breaking out. You usually see the indices, if they're going to correct in a rally, you need to see either a sector begin to deteriorate and break down, or you need to see some of the key leadership stocks that have been leading the market higher. You need to see them break down. I have looked far and wide, and I can't find anything on my spreadsheet that I'm watching that's breaking down. So let's take a look at the spiders here. SPY mentioned last night that we're probably due for a quick 1 or 2 day pullback. We're running up against these monthly levels here in the spider. That's 128.92, and we're 20 cents off that. So spiders are rubbing up against it. The Nasdaq is also rubbing. Just closed right above it today, 56.39. We're at 56.56. The Russell is actually a little bit below it. You'll see the 81.22, and this is 80.13. Notice the Russell actually almost to the penny bounced off of the monthly low, if you want to call that a pullback. When we had a couple of down days at the beginning of the year, we actually traded right down to that level. And so this is where we are with the broad-based indices. I'll pull up the diamonds, and you'll see a similar situation right up against the A up. For those of you who trade the ES futures, I'll give you that level. For the SPOOs, that would be 1287, and we're currently 1284 and a quarter. And I'm also going to show you our quarterly volatility levels. And here they are in the SPOOs. These are our upside targets. 1305. I mentioned that quarterly volatility levels are great signals to show trend, and they also end trends. When you get a nice smooth trend like we've had here from 1,000 to 1284, you'll notice that we broke through the quarterly last fall, and we're coming right up against that. That doesn't mean that we're not going to take it out. We most likely will, but when trends do end, they tend to end right around these quarterly levels. So that's where we are in the ES. And let's look at the Russell, the IWM. That quarterly level is up around 82.46. And in the NASDAQ, you'll see that that is about 57.41. So we're getting close there. So these indices are getting very, very close. If we continue to rally, we're really only 1 or 2 days away from hitting these quarterly levels. If we do manage to close this week strong, and we will probably hit those quarterly levels, I would suspect that we do bounce off of them to the downside. And next week, when we get our new weekly levels, we will most likely test the bottom of those. I'm going to show you some weeklies this week real quick. You'll see that we broke out real early in the week on the Nasdaq. This was the first clue to not short this market. When you start to see these weekly levels break out to the upside, you do not want to be short the market. Here we are again in the spiders, and here we are in the Russell. So again, we broke them out early on in the week. And right now it looks like this rally is going to continue. It is getting long in the tooth, but if we get a pullback, we're really only looking at maybe a 1 or 2 day pullback, and those weekly levels will be key for any short pullback. In our next segment, we're going to go over some individual